Hi everyone, thanks for tuning in. Today I want to talk a little bit about life insurance. My first career out of college was selling life insurance, and I decided not to pursue that as my career, but I still am really passionate about life insurance and sharing that information with people because I really enjoyed it. So I want to tell you a little bit about two different kinds of life insurance. There is more than just these two, but these are the most common, the most that people know about, at least a little bit. So we're going to talk about these two, what the differences are, and how you should use them. So we've got term and whole life. Term life insurance is exactly what it says. It lasts for a certain term. So this can be 10, 20, 30 years that the life insurance lasts. So we've got timelines here, now and death. Okay, so I'm going to show you how it works with term and with whole life. So with term insurance, you purchase it now, and then let's go with 20 years. Let's say it lasts 20 years. So we pay the same rate per month that we signed up for. So let's say it's $10 a month. We pay $10 a month for 20 years for that amount of coverage that we have. Let's say it's $100,000. So if we die within 20 years, we get, or our family gets, $100,000, and we've paid $10 a month for those 20 years for that $100,000. Now, if you pass away in year 10, then you've paid $10 a month for 10 years, and your family gets $100,000. Every year up until that 20th year, your family will get that $100,000. Now, when year 20 comes around and gets to the end of the year, that life insurance no longer exists. So you've paid for the 20 years, you've paid $10 a month for 20 years for your family to get $100,000, but if you don't pass away within that 20 years, then you have to repurchase another term life insurance or another type of life insurance to cover you after that 20 years. So the term only protects you for that term that you have signed up for, whether that be 10, 20, or 30 years. In this case, we're saying 20. So from here on, you have to purchase another term life insurance. So say you get to this 20-year mark, and then obviously you have not passed away, you still need that life insurance. Now your rate goes up from $10 to whatever the rate is for your new age. So you're 20 years older, that life insurance is going to cost you more because now you're older, you're more of a risk. So let's say you still want $100,000 to go to your family, but now maybe it costs $50. And you sign up for another 20-year term. So say you make it that 20 years, you have to start again at whatever that rate is. So term life insurance, again, only lasts for the term that you've chosen, and the rate does go up as you get older. Now, whole life is a little bit different. Whole life you purchase, and it lasts for your whole life. So say we purchase it now at $20 a month, and we have, again, $100,000. That $100,000 is going to go to our family no matter when we pass away with whole life. Now, it costs a little bit more money than term because it is guaranteeing that it will be there for your whole life. No matter when you pass away, that $100,000 goes to your family. Now, you have a couple options with whole life. You can choose to pay this $20 until you die. So you pay $20 a month until you pass away. That is the least expensive option for whole life. Now you can also choose to pay it off, kind of like a car. So say we choose 20 years. I want to pay a little bit more money, let's say $30 a month, but I want that life insurance to be paid off in 20 years. Okay, so whole life you can do that. You can choose to pay a little bit more and pay off the life insurance, but then it still lasts you until you die no matter what. So overview, term life insurance is less expensive, but it only lasts a certain term. And then whole life is a little more expensive, but you can pay it off and then it will last your whole life. Or you don't have to pay it off, you can just pay until you pass away, but you know that that life insurance is always going to be there versus the term insurance that is going to go away after a certain amount of years. Now, there is benefits to having both, so depending on your situation, how much debt you have, especially if you're a business owner, you may want a little bit of both. So whole life can be used to cover your final expenses, so what happens when you actually pass away, burying the body, that kind of thing. And then term life insurance can cover your debts. So as we go through life, we generally pay our debts down a little bit. Or if you're a business owner and you know that there are certain things that will need to be taken care of if you pass away within a certain time frame, we can have term life insurance to cover the debts that we have and the bigger sums of money that would need to be paid if we passed away. So whole life is great for your final expenses, a lower amount of that, and then term life insurance to cover your debts, your business succession plan, that kind of thing. Hope this was helpful. Leave any comments or questions that you have and subscribe for more.